Good afternoon, masterminds. Apologies, didn't get the video out a little bit earlier. I was driving back from the beautiful York Peninsula. Purposely put my phone on aeroplane mode and set up a trade before I left. Looked at the markets, gave you a quick update. I wanted to try my best to tune out over the weekend because it looked pretty hairy. Had all my strategies and alerts, pre-planned. However, the market has decided to run us down before the weekly close. That happens, unfortunately. Now, when this does happen, it's a great reminder to go, all right, this isn't going to make it easy for us, going forward and just in markets in general. When you are waiting for something nice and neat, sometimes the unexpected can happen. And this is where we need to potentially have a backup plan in place. So if we're looking weak going into the weekend, or, we're seeing a setup that which we start to think, go, okay, this would be great if I get confirmation. However, if it doesn't work out, do I have a backup plan in place? Do I have stop losses at a level which, if it goes much lower than that, are you going to be very upset if you wake up the next day and it's a good 10% lower? So what we're seeing at the moment with about 80, well, no, it even ripped through the true mean at 81,000. So it just elevated down, crushed all those levels. If you had stop losses in there, fantastic. If you didn't, you're waking up today kind of in no man's land going, okay, what do I do here? And I think you have to step back and stick to our plan. Originally, it was, okay, on the close on the weekly, I'd manage that risk. Now, if we go back a week, we actually did close the weekly below the 100-week moving average. Had a couple of days afterwards, which were green. We're trying to push back into it. Not ideal when we came down on that weekly candle after that, obviously. But when we had that first close, we almost have to, again, we can create narratives and push back in our minds of, oh, maybe I'll just wait, maybe I'll do this, maybe I'll do that. But that was the clear signal. And unfortunately, for people who wait like myself, it can cause a little bit of, oh, I should have maybe reacted a little bit differently. If you didn't have stops in place, I did, that was, thank goodness. But, just falls down like that. So now where we're at the moment, I think that's a really important place to look at the charts. The aggressiveness of the move down is, kind of like, wow. However, this, I think, points to instability in major macro markets. Bitcoin and crypto has been, shot to hell over the last 6 months. And I think beyond any reasonable doubt, we have to think now we are absolutely in a bear market. This was in Checkmate's webinar. We had, this is a fundamental bear market, but price action isn't responding in a bear market fashion. It is now. We've got confirmation. It's falling over. The 50-week was obviously that broader confirmation, but now we're seeing these levels fall over and bears really sticking in the knife. So now's a very interesting point in time where we have to look at the downside targets and just be sober about it and go, okay, is Bitcoin on sale here? Am I adding to my longer term stack? Have I risked off enough? Have I given myself enough liquidity? These are all questions you have to answer yourself, and we'll just have a think through some of these broader topics together. My sense is with macro, when we had the Epstein files released overnight, it is causing some serious issues globally. But before that, we had debt markets reacting quite volatile. And then we had metals, just go vertical, climb parabolic. It's never a good thing. So while that was like fantastic if you're in metals and whatnot, and if you sell out at a certain point, you feel pretty great. And also if you're buying at a discount, fantastic. But metals skyrocketing like that, it leads to things which we don't know what they are. But some people are going to get blown out on the other side, whether it's some leverage, and we've seen some incredible corrections in those metals, gold and silver. We'll have to have a look at the cross currency. Where do you risk off if you want to risk off in Bitcoin? My view right now is the safest place to be is US dollars or Australian dollars. Just don't look at trying to move into something else. Just go into the liquidity, because I'm seeing how the S&P looks, how everything just feels a little bit COVID-y, like something's about to drop, like there's another shoe about to fall. Crypto with its idiosyncratic issues with sellers coming in at 1010 and probably 50% of the market makers getting blown up in October, obviously is making this 10 times worse. I'd even go as far as saying this period in time feels worse than FTX because the industry itself is quite irrelevant right now. Back when FTX happened, the broader crypto space still felt like, okay, this is all happening, it's moving. No, FTX was an isolated exchange, but the projects themselves